The Indian rupee has been making the headlines in the recent times. The current exchange rate between USD and INR is 81.5, which means in order to get $1, you have to spend an amount of 81.5 rupees. And if you have a look at the exchange rate, which is prevailing 6 months ago, it was just 75. So in a span of 6 months, the rupee lost its value by almost 8%. So why the value of the Indian rupee is falling and how it is going to affect our economy? Let us try to understand through this video.
The US dollar. Remember yesterday, rupee had hit a new low and was just within a striking distance of 80.
First of all, how the exchange rates will be decided? It purely depends on demand and supply basis. If the demand for the US dollar is high, then the price of the dollar will go up. And if the price of the US dollar is increasing, then obviously the price of the domestic currency will fall. Now, what causes the increase in the demand for the dollar? The obvious reason is the country's imports. If the country is having more imports than its exports, then the demand of the dollar will be higher than the supply. There are plenty of reasons which led to the recent fall in the Indian rupee. But the three main reasons are: number one, higher crude oil prices, which were triggered by Russia-Ukraine war. This led to the crisis in the oil reserves across the world and the crude oil prices shot up. 80% of the oil and 50% of the gas consumption in India is imported. This has hugely added to the cost of imports of India. Number two, higher returns on investments in the dollars. The Fed has been continuously increasing the interest rates in order to tackle the inflation, which made the investments in the US more attractive. As a result, investments started moving to the US instead of emerging countries. Number 3. Foreign capital outflow. Foreign institutional investors have sold shares worth of $30 billion in the Indian markets, which is far greater than the sell-off happened during 2008 crisis, which is just $11.8 billion. And as money flows out of India, the rupee-dollar exchange rate gets impacted. How a common man will be affected because of this fall in Indian rupee? Our household expenses will go up. The prices of fuel like petrol, diesel and cooking gas, which are already high, they go up even further. And when the fuel prices increases, it will have an indirect effect on everything which we consume. And even we have to pay higher prices for our electronic goods like mobile phones, televisions and laptops. And if you are a student planning for foreign education, your education expenses will go up. And if you have any plans for foreign travel, you might think of changing your plans. Hope you found this video informative. Please do like and share it. If you have not yet subscribed to our channel, please do subscribe.